Are you a business owner using cryptocurrency in your business as a form of payment from your customers, maybe a way to pay your vendors, or as an investment being held by your business? Well, in this video, I am going to be explaining to you the tax implications of all three and what you should know. As a business owner, if you are receiving cryptocurrency as a payment from your customers, I absolutely get it, right? Because you want to get paid by any means necessary. And if your customers are willing to transfer cryptocurrency over to you, you by all means need to be willing to accept that payment. But there are tax implications to receiving crypto as a payment. And I want to make sure that I explain that to you. And I'm going to explain it to you by going back and refreshing your memory on something IRS already has in place. And it's called the barter and exchange world. Back in the day, people used to barter services. If I were an accountant and I needed the services of a dentist, maybe I did accounting work and maybe he did dentistry work for me. As a result, the rules around bartering and trade are already out there. And when you are receiving cryptocurrency as a method of payment from your customers, because crypto is deemed to be property, it's barter and trade. So we have to be very careful as to how we do the accounting. So let's use an example. Let's say, for example, I'm an accountant and I perform $5,000 of services for a plumber. The plumber is going to pay me in cryptocurrency. On the day that the plumber pays me, the value of that crypto is going to be how much I'm responsible for recording in income. Not how much I think I'm charging that customer, but the fair market value of the crypto on the day that the customer pays me. That's going to cause a little bit of headache when you're thinking about your accounting records, because maybe you invoice that particular customer in an amount of maybe $5,000. But when he transferred that crypto and it got into your account, maybe it went up a little bit. Maybe it went up to $5,100 or $5,200. The value on the day that you receive the transfer is the amount of income that you're going to have to record on your books. And so it's very important that you're tracking your crypto by the date received and really the time. The moment it hits your account is the moment that IRS is going to be looking at to determine the amount of income that you should be reporting. That's very important. It's also important to realize that just because you're not receiving those cash dollars that we all like to get, you still have to report the value of the crypto that you actually receive. Many people are thinking, you know what? I'm not getting that money in my bank account. It's going to be maybe in my decentralized wallet or wherever it is you may be holding. But I want you to really understand that you have to record the income. And you may be thinking to yourself, well, Karla, how is IRS going to know that there was any income? IRS is going to look at your sales receipts. They're going to look at your invoicing. If you use numerical numbers to invoice, they're going to look at the numerical sequencing and wonder what happened to invoice 1001, invoice 1002. Where did the money go for those particular services? Is this a business that is going to do services for free? I highly doubt it. So make sure that you're paying close attention to how you are receiving crypto for services as a business. And also remember, if you are a sole proprietorship, an LLC, or a business on a cash basis of accounting, you have to report that income the moment it is received. If you are a business that's on an accrual basis of accounting, meaning you report income when earned, meaning you actually report the income after you've done everything to earn the income. You delivered the product and all the other things that you need to do have been done. Then you need to accrue for that income. There's going to be a lot of things to consider, but just remember that if you are receiving crypto as payment from your customers, you absolutely are going to need to record income. Another thing I want to make sure that you understand as a business owner, if you are paying out your vendors in the form of crypto, what does that look like for you? This is something else that is going to cause you to really do a couple of things. And this can really get confusing. So let's go back to an example. Let's say that I use my telephone vendor, the person that handles my telephone service in my company. And let's say I owe that vendor $2,500. Instead of me writing a check or instead of me using my credit card, I transfer to that vendor cryptocurrency in the amount of $2,500. What am I, the business owner, going to have to do? Well, I'm actually going to have to do two things. And let me tell you what those two things are. Number one, I paid my telephone vendor, so I want to make sure that I record that payment in my books and records as a $2,500 payment to pay my telephone vendor. So I am going to have a telephone expense in the amount of $2,500. But is that all I'm going to have? No, it's not. The secondary thing I have to do is actually look at whether or not I have a gain on sale on that particular transaction. And you might be thinking, Karla, what do you mean? Well, let me tell you. Remember, the IRS looks at cryptocurrency as property. Anytime you are selling property, you have to calculate the gain on sale. Even if you transfer that property to someone for payment of services, you still have to drop back and calculate the gain on sale. Yes, I paid my telephone vendor $2,500. He's all squared away or she's all squared away, but your books and records may not be fully squared away because now we have to look at the gain on sale of the transaction. Let me tell you what that looks like. What did you buy that crypto for that you used to transfer to your telephone vendor? Maybe you bought that crypto for $1,000. Maybe that was your initial cost basis, your initial payment for that crypto. That means that if I bought that crypto at $1,000 and now it's gone up to $2,500 and I'm transferring and paying for something for $2,500, I have a gain on sale. The fair market value, the sales price is now $2,500. I bought it for $1,000. That now means I have a $1,500 gain on sale. And that's going to be a capital gain because remember, cryptocurrency is property. And when we sell property, we're going to calculate a long-term gain or we're going to calculate a short-term gain. Bottom line is you have to record your purchase date and the amount you purchased the crypto for, and you're also going to need to record the sales date and the fair market value on the date that you sold it. So when you're using crypto to pay your vendors, you have two transactions to calculate. You have to calculate the gain on sale and you have to calculate the actual cost and expense of the vendor you paid. Now, the third thing I want to make sure you're aware of is if you're using crypto as an investment in your business to grow capital for your business, that means that you're holding crypto and you're looking for that crypto to go up in value because you want to make sure that you have some good reserves sitting in your business. That's really important, right? It's prudent for us to have cash reserves sitting in our business. But guess what? If you're holding crypto as a business owner, you want to make sure that you are recording the holding of that crypto on your balance sheet. I know sole proprietorships and single member LLCs are probably not tracking their balance sheets, and that's going to be a completely different video we're going to go into. But let me tell you why it's important that you're calculating your actual investment of crypto on your balance sheet. Because businesses that look like they have equity in their business are going to be valued higher. You want to make sure that the value of that crypto is sitting on your balance sheet at the end of the year. That's really important. It would be no different than if you were holding a piece of real estate in your business. You would want that real estate to be sitting on your balance sheet at the cost in which you bought that particular real estate. You want to also do the same thing for your cryptocurrency. You want to make certain that you're properly reflecting the investment that you have in crypto on your balance sheet. And if you're not, you're really selling your business short. And the reason why I say you're selling your business short is because businesses are valued based on the assets that are held in a business, the recurring revenue that businesses receive, the gross revenue that businesses have, and the net profit that they're generating. Make sure that you're keeping your books and records adequately stated by recording your cryptocurrency on your balance sheet. And if you receive that crypto because you invested that crypto in your business by buying it out of pocket, you now have contributed to your business. And contributions to a business as a business owner are very important. You might not think so in the short run, but in the long run, it's something we want to make sure that we're taking care of and we properly record. So as a business owner using crypto in your business, whether you're receiving payments from your customers for services of merchandise or for services rendered, whether you are using crypto to pay individuals, your vendors, you want to make sure you're doing it proper. If you're holding crypto as an investment, you want to make sure you're doing that proper as well. And the fourth thing I want to say to you is if you are paying employees in crypto, this is really, really super important. You want to make certain that you are doing all the payroll tax returns. Payroll taxes are an annual basis from January through December 31st. If you paid somebody in Q1, first quarter, January through March, you have to report that on payroll tax returns, 941s. If you paid somebody in Q2, Q3, Q4, you have to report that in the quarter in which you pay them. At the end of the year, those individuals are to get a W-2 form. You have to be very careful. Make sure you stay in compliance because this is going to be an issue if you are paying employees, not independent contractors, employees. You want to make sure that those employees actually get their W-2 forms at the end of the year. I love the fact that we can use crypto in our businesses. I love the fact that we can use it for so many things, but I like it even better when we as business owners are being in compliant so that we can stay away from the IRS. If you enjoyed this video, I want you to like, comment, and subscribe. I can't wait to see you on the next video.